Story time. If you've been following this channel for a while, you know that last week I went on a trip to have a look at a company. So in this video, I'm going to talk to you about two trips and how they're different. And hopefully I'm going to be able to communicate to you is what kind of opportunities you can have when you look for deals when everybody is talking about recession and the end of the world. If you're new to this channel, my name is Mariusz Konieczny. I run Microcap Explosions, a website dedicated to microcap stocks which are ignored and underfollowed by the investment industry. I also wrote about 10 books on investing, one of which is available for a free download at microcapexplosions.com. I also created valueinvestinguniversity.com, which is a free resource to make you a more intelligent investor. So last week, I went on a trip to take a look at a company, and I made a video about it before that on paper what I was looking at is as a possible investment that can yield 80% dividend yield. Yes, 80% dividend yield. And some people were skeptical if something like this is even possible. And you see, I like to talk about things like if you have a different mindset, you can literally create your own dividend. Okay, you see, what most people think of dividends is, you have a company that pays dividends, and depending on the dividend, it's a particular dividend yield, right? So if you have a stock that's trading at, let's say, $100, and then the dividend is $5, that's a 5% dividend yield. And usually stable companies, mature companies, when they pay a dividend, they can trade for 1% dividend yield, maybe 3% dividend yield. When it gets to really high dividend yield, it's got to be during like a very heavy market sell-off or something like that. Those companies are priced very high in relation to dividends, and they're also priced in relation to free cash flow and all things like that. But in such situations, you have a product that is given to you. It's delivered to you as a finished product. And the same thing is, for example, for real estate. In real estate, let's say apartments, people like to talk about cap rates. So let's say if an apartment building generates $100,000 of net income and the price of that apartment is $1 million, then it's a 10% cap rate. And you can't buy an apartment building for 10% cap rate. Usually it has to be 5% cap rate, 6% cap rate. So if it's at 5% cap rate, if it generates 50,000 of net income, then it's going to be priced at $1 million. That's 5% cap rate. And I'm talking about unlevered cap rate. And so what everybody wants is a particular cash flow, right? And if the cash flow is stable, if the cash flow is already there, you're going to pay a huge price for it because it's already there. It's given to you, right? You are not solving any problem. Somebody else produced a financial product for you and you pay a price for it. But you see, I always thought of myself, when you go into situations, you can create your own dividend. So for example, a while ago, I went to Wichita Falls, Texas to look at a mobile home park. And it wasn't a park where it was stabilized. It had tenants, it had income, but I think it was losing money. So you want to look at a deal like this and you want to see if you come in, if you can fix it up, stabilize it, and then increase rents, fill up the vacancies, and then you create your own dividend. You create your own cash flow. And you can do that. You can usually get a high return like this because you are doing something, you are solving a problem. When you just acquire something that's already there, you're not solving any problem, so you're paying for somebody else to solve the problems and deliver your finished product, right? So the trip that I took last week was that kind of thing, where you see the company is in the business of manufacturing, right? And I'm not going to talk about what it manufactures, just say it's in the business of manufacturing something from scratch. So it manufactures a product and then it sells that product wholesale to other retail stores, okay? And the company wants to, in addition to selling its product to other retail stores, it is in the middle of building its own store. So in other words, whatever it manufactures, some of the product is going to be sold through retail, other retail, and some of it is going to be manufactured and sold through its own store. So of course, when some of the product gets sold through its own store, it's higher margins. When it's sold to other retail stores, it's lower margin because that other retail store has to buy at wholesale, mark it up 100%, and they have to make a profit. So, that's just normal way of doing business. So this company was on the path of, it was profitable last year and everything. And then it was just about to start building its own retail store, okay? And it ordered the material, and you know how it is today. It's hard to get any materials because of the supply chain disruptions. So it ordered the material for the building, for the retail store to be built. And so it kind of drained itself out of cash. And then a piece of equipment broke. And it literally took the company to its knees. Like half of the business got completely paralyzed because of that equipment. And the company already knew that the equipment at some point needed to be replaced, and that's why 6 months ago they ordered that particular equipment to be replaced. But as everything now takes forever, for example, we at our house ordered a garage door, and it took us 7 months of waiting to actually have the garage door delivered and installed, which for us happened last week, but it took us 7 months. So everything takes forever right now. So they ordered the piece of equipment 6 months ago. And then while they were waiting, that equipment, older equipment, broke. And like they were facing a situation of, well, we already ordered the new equipment and it's still not delivered yet. The old equipment just broke. We spent all this money on the material, or they put down half of the money for building the retail store. The money is gone. The business is like on its knees right now. And what do? Well, the equipment, if we fix the equipment, then that literally is going to be almost half as much as buying the new equipment, which we already ordered. They were in a panic situation because it's like, what do? Like, if we order new equipment, well, we just did. It's going to take another 7 months. And then that equipment, broke 60 days ago. So for those 60 days, they're pretty much just operating the best they can and just waiting. And then on May 18, they get a phone call that the new equipment is ready to be installed. But now they don't have any cash because they just spent the cash to put down, on the material for the retail store. So that's where the opportunity came in. That's when I got the phone call on Thursday that this company needs to raise $1 million like yesterday to fix this problem, because now the equipment is ready to be delivered and they paid for half of this equipment already, but it's not going to be delivered until they pay the rest of the money, which they don't have. They need to raise $1 million ASAP in this terrible market. So I got a phone call on Thursday to take a look at this, and I didn't want to look at it. I'm like, this is not a business that I understand very much. This is not really a business that I want to look at. I don't have a lot of zero knowledge of this business. So I didn't really want to go. I didn't want to go. The more I was learning about this business in general, the more I didn't want to do it. But then I said, because the person who called me, I trust this person, he's like, take a look at it. You're going to make a lot of money. So then I said, okay, fine. Can I go and see it? So that's Thursday. He's like, yep. I said, talk to the CEO, schedule a meeting. I'm going to go out there and see it. So that's Thursday, right? I jump on the plane on Tuesday. I arrived there on Tuesday and I stayed there Tuesday, Wednesday. And they wanted to raise the money, the $1 million at a particular price. And I said, if you want this raise to be successful, I need the price to be 50% lower. Like, it needs to be cut in half. Because in this market, it needs to be such a too good to be true opportunity that people will just, want to do it. So that's why, based on the projections that the company showed me that after they fix this equipment and then they build the retail store, it's going to generate a certain amount of revenue. And they already they were profitable. They were profitable last year, and they were generating revenue. But now with this equipment, they can increase their output, and then with the retail store, they can sell even at a higher margin. So the numbers absolutely made sense. So then, based on those calculations, I was like, okay, after if we leave the price at where it is, the dividend yield could be like at 40%. So 40%, it's not too good to be true. But when I said I need the price 50% lower, then that's what it made the dividend yield to be 80%. So I said that if you think that this is too good to be true, you can blame me, because I made this too good to be true, because I needed the price to be lower, because look at the market, like everything is selling off. And like in order for people to get incentivized to do a deal like this, it needs to be so good that they might consider taking the money from somewhere else, because everybody's invested somewhere else, and put it into this deal. But then again, it's like everything has its risks, right? So then I'm like, I needed to look at like what kind of assets do you guys have? Because it's a private company. It's a private company. It's not a publicly traded company, and it's a private company that wants to go public within the next 12 months or so. I said, like, I need to see all of the assets that you own, and we need to determine what these things are worth, and during a fire sale, what they could sell for if something goes wrong. So they provided me with like all the appraisal reports on everything like they own. And then they even provided me with offers, because these guys have offers on the retail building that's not even finished, because it's in such a great location that people want to buy that building. It's not even finished. So like I said, well, people can give you verbal offers. Do you have anything written? So the whole company valuation is like $4 million. Somebody wants to buy the building for $3 million. Okay. And I saw the purchase agreement or the term sheet for $3 million. Then they have a land, like bunch of land that's worth like, based on the appraisals, like close to $2 million. So we're already to like $5 million worth of value. And then they have all this equipment in the factory that was appraised for like $8 million. So if we were to say, sell on a fire sale, that $8 million, let's say for $4 million, so we have $4 million, plus 5, $9 million. So $9 million more, like margin of safety, right? That's margin of safety, $9 million. The company is valuing itself at like $4 million. So we have margin of safety, and then if they successfully deliver, then the dividend yield is going to be like 80%, right? So think about this for a second. And I'm telling you this because this is what's possible in this environment where everybody's thinking about a recession. Everybody's talking about a housing crash. Everybody's panicking. Nobody wants to put money to work. And you're available to go and look at a deal, to go jump on the plane right away and look at a deal. And maybe you're the only one at the table, right? So think about this for a second. Let's say you put $50,000 into a deal like this, right? And by the way, this deal was only like available for 35 people. That's it. 35 people. Why? Because it's a private company and they have a limit as to how many people they can accept. So it's like 35 people, you take it or leave it. So let's say you're one of the people, and you put $50,000 into it, right? And let's say if it's successful, and then the yearly dividend yield after, let's say, 12 to 15 months after they stabilize this business again, and that 50 is 40,000, right? So think about this. You're investing $50,000 and you're literally creating an income stream of $40,000, right? $40,000. It's like some people don't even make this after going to college, for years and years. But now, most importantly is, if let's say people always complain about that they can't find things that cash flow, right? So let's say you wanted to create an income stream of $40,000 and you only have stocks that have dividend yields of 3%. You take that 40,000 and you divide it by 3%. You would have to invest $1.3 million. $1.3 million to get that kind of dividend. And let's say if the dividend yield was only 1.5%, then you would need $2.6 million to create that, right? That's what happened. That's what you have to pay when everybody is happy about everything and you are not willing to be part of the solution, right? Because here, what we're doing is we are providing a solution, right? Because think about this. The company has a major problem, right? It needs money fast. And the market is selling off. Everybody's calling recession. How many banks are going to lend on something like this? Zero, probably at this point. How many investors are going to be willing to look at a $4 million company? Hedge funds are not interested. They're too big for that. How many other people are going to look at something that's, $4 million and they're going to provide $1 million of liquidity like right away? How many people are going to get the phone call on Thursday and jump on the plane on Tuesday to be there? Like right away. And that's the opportunity that you have during those times, right? So then I go there on Tuesday, I come back on Wednesday. I get to my house at 5 a.m. in the morning, right? And like while I'm there, because I'm so new to this business, I just fire question after question after question. I literally filled up half of my notebook with notes, right? And then on the way back, or like even on Tuesday night, I already started writing the report for Microcap Explosions about this. And then on the way back on the plane, I'm putting the report together because, time is of the essence here. I left on Tuesday, I flew back on Wednesday. So I get home 5 a.m. Thursday, right? Thursday morning, 5 a.m. I go straight to bed. I get like 6 hours of sleep. And then the same day, I put out a report on Microcap Explosions describing that opportunity, putting all the videos together, writing like 3,000 words opportunity describing it, because on Friday at 4 p.m. Eastern Standard Time, we're having a live call with the management. So I need my people to have read the report before we have that call, right? Listen to this. It's only 35 people that it's available, right? And then the management is like, do you think you're gonna have interest? And I'm looking at it, I'm like, hell yeah. And then some people are like, well, you're gonna have a hard time raising money for a private company because it's not, it's not public. I'm like, with 80% dividend yield, because you lowered the price for me, you made it easier for me to raise money. If it was before, I wouldn't have raised it. So I would say within 24 hours of releasing the report and having the call, the whole 35 people is filled up. We are at a little bit over $1 million. And even before the call, it was like about 25 people were already in the deal just by reading my report and realizing how amazing of an opportunity this was. Before the call, it was like already, and while I was on the call, I said, it was like, we're already at 29 people, 800,000, only 6 spots left. After the call finished, 35 people got filled up, and then there's like 10 people on the waiting list. And I wish I could expand it to more people, but it's only 35 people. The point is that opportunities are out there, and the best time to find them is when everybody else is panicking, okay? When I went to see the mobile home park, before this whole panic started happening, I looked at the deal and it was looking great on paper. When I went there, it was awful. We ended up walking away from this deal, and we ended up telling the seller that the only way we'll take this property if you give it to us for free. And of course, he didn't want to give it to us for free because somebody else, during this happy time, somebody else wanted to pay him something for this, even though it was worth nothing. And contrast this with this situation. Everybody's panicking, everybody's calling the housing crash, blah, 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 blah. I jump on the plane and look for deals. So I'm telling you this is because you have a choice. You can be depressed, or you can wait for the sun to shine, or you can roll up your sleeves, look for stocks, look for deals, and this is the time to plant the seeds for the future growth, future profitability, and future fantastic returns. You do it now. You do it when you have no competition. So that's it for this video. Thanks for watching. I hope you enjoyed this story. Take your time to subscribe to this channel. Click on the notification button. Like the video and leave me a comment below. Thanks.